Trillions will flow into blockchains like Stellar XLM. But how are we deriving at this? And how can we understand where the market's going right now? Well, for this, we really need to think about doing some technical analysis. We need to start thinking about what's happened with the dollar in previous market cycles, in previous crashes, to determine where we are right now and where we're going. And we have to couple this up with what's happened in the stock market, because the stock markets, like the Dow Jones, really gives us an indication as to where cryptos are going. And hence to say that if the Dow Jones is crashing, you can certainly be sure as hell that cryptos will be crashing. Bitcoin first, along with other cryptos. Now, to get a full understanding of what could happen, we really need to realize that at present, in the present day, okay, what is governing the dollar, the Dixie, if you like, that basket of currencies, what is governing that, what has weight on that is the 10-year yield. Bonds. So therefore, if bonds are selling off, the 10-year yield rises higher, the percentage point rises higher. And so when you think about it, actually, if you wanted to, and you did your own research and your own technical analysis, and you determined that, you know, the 10-year yield is actually quite high right now, and actually bonds are really quite low. And if you've seen my previous video, you could see that bonds are really quite low because they've been selling off, right? So if you wanted to make money and you wanted to get into the bonds market, now might be a good time, because if you brought into a 10-year yield, you would be securing 3.23% interest by holding these bonds. And not just that, but if bonds started to rise and you sold them, you've made money and a premium if you've held it until its expiry point, I believe. I'll double check me on that. In any case, I digress, because we're talking about Stellar and how the stock market can affect it, and how the US dollar is affecting it, and how we can potentially build a picture of what could be happening. So for this, we really need to think about using more indicators like the Fibonacci support and resistance or retracement tool to determine what's happened in the past with the stock market, like the Dow Jones, and to see where we are now with the Dow Jones and Bitcoin. Because when Bitcoin rises, altcoins rise. When Bitcoin falls, altcoins fall. And on the rare occasion, you'll get an alt season where the dominance shifts, like now. Bitcoin dominance is down there, almost dipping below 40%, it's likely to go below 40%. And that is the reason why we can rely on Bitcoin to indicate to us where altcoin prices are going to go. Altcoins like Stellar XLM. And so, thinking about that, what we need to do is see where the stock market is potentially going to go, using history as a reference, using our Fibonacci retracement tool, see how much we got left, as if we were going to a top, the full Fibonacci extension. Then determine what that could mean for cryptos. But not just that, we need to see what happened to the dollar. During these times, we need to get some reference points. And when we think about what happened to the dollar, we have to determine, we know what the forces are behind the dollar, what is going to enable the Dixie to rise and what's going to make it fall. So you could be sure as hell that if bonds are selling off, the dollar's rising. Quite simple. Yeah. If bonds are being brought up, the dollar's dropping. It's decreasing in value. So how are we then going to get an idea of what happened to the dollar during the 1920s stock market crash to be able to build a picture as to what could be happening to the stock market now? We have to think about what the dollar was backed by back then. During the 1929 stock market crash, what was it backed by? Gold. So we have to look at that commodity at that period of time and see what the prices were doing then. Because actually, if gold back then is doing what the 10-year yield is doing now, then that gives us a clear indication as to where the price is going and what is happening, what will be happening with the dollar. We could then take a fractal from gold during that time and see, as a comparison, as to the 10-year yield, bonds, how that can affect the price of the Dixie. So gold will inevitably either push the price of the Dixie higher or make it drop lower, right? Back at that time, yeah? But you'd have to think, really, if stocks were selling off, surely at that point in time, people were rushing in to commodities like gold. They don't want to hold the dollar, they want actual gold, the actual physical gold. Could they buy the actual physical gold? Well, that's another thing. They could certainly have the dollar, and that was backed by gold. Now, in order for us to build that picture, again, we need to look at doing some more in-depth technical analysis with more tools like the Fibonacci retracement tool. So, in any case, we're going to need to see that in another video. I'm Nathan of Zion, aka Nathan. Smash the Zion coin up there to like and subscribe. Check out the next video, because it's going to be on technical analysis, Stellar XLM technical analysis. We're going to be looking at how gold price affected the US dollar back in the 1920s, and then we're going to see if we could build a picture as to what could be happening in our future now. Have a great day. Take care now.